While India rallies to become a $5 trillion economy, there is a disruption that is coming in from technology's end, and it's fairly rapid. And possibly the magnitude of impact might be highest in the consumption space where Alder's primary focus is. So, in such a scenario, how do you safeguard or how do you keep a track of these technology advancements which could impact one of Alder's portfolio company?
So many businesses that we own are traditional till date, and obviously that's changing at the margins as we get to see new tech businesses getting listed. But to answer the question that how technology is disrupting businesses today in India, let me put it this way. The largest amount of capital that has been invested into the Indian equity markets by venture capitalists, right, have gone into mainly two space, right? One, the financials, and the other one is e-com, right? These two are the largest spaces where actual capital has been deployed. And if you think about it, what is changing from a consumer perspective is, think about the scenario that for many decades in a row, consumers have sought materialistic needs, right? They have fulfill their desires to own a durable, they fulfill their desires to own maybe a car, maybe food requirements, and all of those needs at least in many advanced countries in the world have been fulfilled. There's the penetrations of televisions, refrigerators, cars are really at the peak levels. What are consumers today desiring? They're seeking experience, they are seeking some things services that can solve their problems. They are seeking entertainment, right? These are the things that they are incrementally willing to spend on. And with that, if you look at India, India too has gone through another curve on the urban side of it, right? At urban markets, many consumers have got, refrigerator penetration is 70%, right? So it's not like everyone who has to have a refrigerator has a refrigerator, even the smallest household in the urban side of it. So when that's the fulfillment which is happening, everyone has got table televisions, everyone's got a TV at home, right? The need has changed, and with that need changing, it disrupts certain sectors which are high frequency, which are commoditized, and which can be replicated very easily. So let me ask you a question, again going back to the Maggi noodles and the Doves of the world. Can technology disrupt Maggi noodles and Doves of the world?
Possibly not.
Absolutely. Can technology disrupt maybe footwear brands and apparel brands? To a certain extent. Let's say for an Amazon marketplace, you might have many apparel brands and you might have many footwear brands. But at the end of the day, a customer who walks into the Amazon store, is he just going to buy any brand? Probably not, because there has to be a lot of effort made by the company to make sure that they market these brands and consumers connect, consumers transact, use those products and say that, wow, these are high quality products that I'm spending for, and they come back. There's a repeat, right, which happens. Typically, more often than not, many branded businesses gain market share after they get onto tech platforms. Many cases. In many businesses that we know, market platforms like e-commerce platforms are a way in which they can distribute their products and services. FMCG companies talk about 7% of the revenues to 8% of the revenues coming through tech platforms. There are many other companies which talk about, some apparel companies are saying that 20% of the revenues are coming through tech platforms. It's a distribution model, right? Does it make them weaker? It doesn't. Now take another business altogether. There are businesses like financial services. Now, financial services are commoditized business. You don't go after taking a loan saying, oh, this is a loan from HDFC Bank or this is a loan from SBI. You're fine with either one of those loans so long as the loan comes to you faster and it's at a cheaper price, and so long as they take care of a little bit of consumer servicing aspects, right? So, the end of the day, those are the business which gets disrupted faster. If you are a retail company and you need to buy a space, and you need to sell from that space, well, there are another platform, digital platforms, which do it with asset-light, in an asset-light way, right? So they don't need a prime location. They can be in cloud, and they can sell products and services, those are the places where it gets disrupted faster. So disruption is not all across. Disruption is in certain parts, right? Are we wary of those parts? Absolutely. We worry about them every day. We own businesses which have disrupted traditional businesses, but are likely to be disrupted by the new age businesses, and we know that the direction where it's going. So yes, tech is something which is happening in India in the unlisted space. We are now on the listed space getting to see this disruption, but it's been there for the last 10 years and has been doing what it's been doing. We are extremely careful about the kind of investments that we do, and as we go along, while we invest into traditional businesses, we hope that we gravitate towards owning these new age businesses as well on the consumer side.
Technology could be a disruption in financial services, but could actually be an enabler for some of these traditional consumer businesses, and not necessarily a disruptor in all consumption companies all throughout.